Hello, everybody, and happy Monday. We'll be especially happy if you're long on gold. The precious metal saw its value go up by more than 2% on Monday, or since Monday, rather, as the mood in the markets continues to verge towards risk aversion. Gold is now testing the high of 1747, which was hit last month. And if things continue to go as they are, I won't be too surprised if it does beat that number. But let's look at what is going on in more detail elsewhere as well. Stocks are pretty much where they were in the trend that is found across the board. So S&P 500, Euro stocks, Americas, Europe, etc. So after some optimism, which was driven mainly by the partial end of the lockdown across several countries in Europe and the Americas, investors became increasingly concerned by news of new focus of COVID-19 in some Asian countries that had managed to bring the coronavirus under control. But this was also happening, unfortunately, in Germany, which was one of the better succeeded countries in Europe in dealing with the disease. So this brought home the idea that the second wave of the disease is possible, and according to some, even likely. And this would be, of course, very bad news for the growth prospects of an already battered world economy. Something else also weighing on the investor sentiment are the words from President Trump. Donald Trump, during an interview with Fox News, implied that he may pull out of the phase one trade deal with China as retaliation for what he perceives as poor management of the coronavirus situation. Economies across the world are shrinking, unemployment numbers are exploding, and the prospect of reigniting the trade war with China is not really what investors want to hear at the moment. Still, the markets are showing remarkable resilience, and this, of course, is because of the action of central banks, especially the Fed, whose chairman, Chairman Powell, has managed to reassure investors that the economy will not collapse. Through its ginormous and ever-expanding purchase program, the Fed is maintaining credit lines open for corporations, and this is what's stopping investors thinking that the markets will collapse and panicking. But looking elsewhere, looking at Forex, the dollar continues to establish itself as a safe haven of choice, especially after, once again, Jerome Powell reassured us all on Wednesday that despite President Trump's pressure, he's not thinking of taking interest rates into negative territory, well, at least not for now. On the other side of the Atlantic, the euro is not doing so well. It suffered this week, and this, of course, is because risk aversion became the prevalent sentiment in the market. And this was especially visible when you compare the euro with another safe haven, with the Swiss franc. So the Swiss franc actually hit the highest point against the euro in 5 years. But not all is doom and gloom. Oil traders will be relieved to see the price of the barrel of crude for the June contract going over $28 this week and hitting the highest level since early April. And as the last day to trade this contract approaches, it appears that the situation somehow similar to what we saw last month, which was incredible, with prices for the barrel of oil going into negative territories and traders paying someone able to accept a delivery of the product, paying them up to $40 per barrel. It was crazy. This doesn't look like it's going to be happening again when this June contract expires later this month. So this is all we have for you this week. Thank you for watching.